Good morning, everyone, and welcome back to this new edition of the Daily Analysis. Yesterday was a day full of events, and the night was no different. Let's do a recap, as usual, to get a quick overview of what could happen today, what scenarios we might be looking at. The day, basically, was pretty calm overall, staying within a trading range with very low volumes, especially in Europe, really negligible, honestly, from a rank percentile point of view. And then, well, in the evening, with the FOMC and some closing activity, there was a bit of liveliness as people waited for Nvidia's quarterly report, which, honestly, was handled in a really shameful way in terms of how the information was released to the public and the markets. In my opinion, for a company of that size and significance to completely mess up the data release, well, it just opened the door to all sorts of speculation. In fact, the stock initially dropped because it had dropped because, basically, the data that was released was disappointing. Then, well, all the various corrections came in the stock, in the end, ended up in after-hours trading at, I think, plus 4.5%, obviously dragging the entire tech sector with it, especially the Nasdaq. The ES followed a bit less, of course, and the other two American futures didn't follow at all. Then, in the middle of the night, though I'm not entirely sure exactly what time it was, the news suddenly came in about a judge from an American court who basically and essentially annulled the tariffs that had been imposed by Trump, deeming them to be illegal, and citing a specific U.S. law as the basis for the decision. I honestly don't really know all the details, to be completely honest. And obviously, this gave a really big boost to all the indexes, because of course, this would mean no more tariffs and everything would go back to how it was before. So, that's what triggered this very large movement. But then, well, after the initial outburst, people started to think things over because, first of all, this ruling can be appealed to the Supreme Court. And let me remind you that many of the judges on the, who make up the U.S. Supreme Court, which the Trump administration can turn to in order to overturn the ruling, many of these judges, as I was saying, have just been appointed by Trump. So, definitely, it could, let's say, well, it could easily turn the situation around in my opinion. And so the question mark that we have to ask ourselves at this point is, all this rally that we've witnessed and are still witnessing, because, after all, the markets are holding, they're staying at their highs. Is it real? I mean, if this thing goes to the Supreme Court sides with Trump, and so we go back to square one where these tariffs are in place, all of this whole rally would deflate. Another, aspect to consider is that, at the moment, the Trump administration keeps announcing that there are a lot of deals on the table, basically ready to be made public, only to then, not actually do it, probably because there still isn't anything in black and white yet, and there still aren't any details about these agreements. And, precisely as a result of this, in fact, just this morning there was news that, for example, the Japanese minister contacted Ben Cent to reopen discussions and, well, to set up a new immediate meeting to address this issue, specifically, this court ruling that would basically overturn all the agreements made so far. So pay close attention, guys, because as I've been saying for a while, we need to be, right now the markets are news-driven, so just one piece of news, one statement, and, well, it can throw off all the analysis, all the studies and approaches we've done. So we absolutely have to navigate by sight. Today, from a macro perspective, well, there's the unemployment claims rate, there are the crude oil inventories, crude oil as usual in the afternoon, basically early U.S. morning, and then there will be some speeches from members of the Fed, who will be talking about yesterday's FOMC meeting. So, even from these speeches, news could definitely come out for the market, so all the more reason to pay close attention. I'd also like to remind you that we're approaching the end of the month, so there will be portfolio rebalancing going on. These are all factors to keep well in mind when we go to trade, so maximum caution and reduced position sizes. That's my suggestion. Perfect. So with this long introduction out of the way today, but it was necessary, let's move on to take a look at, from a technical perspective, what we can expect. At the moment, as we were saying, all the indexes are looking strong. The equity futures are all really pumped up to the upside. We're already trading at the highest levels of today's ranges. In fact, I've provided the weekly levels for free to everyone on Patreon, and I've posted the weekly range levels in the Discord chat, which, as you know, I share for free every day. I also posted the weekly ones, in case the movement keeps going beyond today's expected range, so we have some additional higher reference points if that happens. That said, as we were saying, we're currently trading around these highs. In my opinion, I'm expecting a bit of a pullback from these prices, also because all these rumors that are going around, well, all of this happened overnight and with volumes that weren't particularly high. Yes, there was some volume, but it wasn't very high. So in my opinion, all of this is very, well, vulnerable. It could very easily turn out to be a bull trap. I mean, I don't know. I'm not saying this is a bull trap, but I'm simply saying that all of this could turn around in a flash, just like it happened before. From a technical standpoint, right now we need to watch for a downside break of the 1D max, for the Nasdaq, which at this moment is will act as support. So this is the area I would keep an eye on. The break of this area, which basically corresponds to this, let's say, this small sideways movement here, basically following the consolidation after this rise. We could also expect a test of the lower BC3 levels, or EA, on the upside. Of course, we should watch the highs reached last night, which are around the 21,830 area. A break above these could definitely push prices higher. Let me quickly load up the weekly levels, because, we're basically already working around them. Wait, here they are. We're working on the highest levels. I mean, we have a few more levels above that. So, this is the range of the weekly max, which is at 22, 230, 240, more or less. So let's keep an eye on this area, this zone, which is the weekly VIX, the first level of weekly VIX resistance, which is this green line you see around 21,834. So we'll be monitoring this area here on the upside. Let's take a look at ES, which is in a similar situation. Here too, I'll show you. Here are the weekly levels. We're working a bit below. Basically, we're already moving back into today's new sub-range high. So here too, let's keep an eye on this area with the 1D max, which should now act as support around 5,974. A break of this level could easily lead prices to test the highs reached on Wednesday, which also correspond to the BC3 range high. So, it seems to me like a solid target and probably a good spot to try a quick swing to the upside. But we'll see how it gets there, because here too the volumes are clearly low and declining. Well, they've been low. I mean, not really declining. We'll see during the day if these news items will attract more volume. Let's move on to the other American futures. Here they are, starting with the Dow Jones, which also, shot up, but it's still trading below. It traded below 42,800, which was kind of the resistance area we pointed out yesterday. Here, let's keep an eye on, let's monitor 42,500 and 42,600, so basically the same area as the VIX and 1D, which are already being tested right now. So let's watch this area closely, because a break of this level, around 42,600, could easily bring prices back down to test this area here at 42,450 or 42,400. On the upside, of course, we'll be watching 42,700 and 42,800. Let's also take a look at the Russell, of course, which has also rallied as a result of, well, the resolution of these tariffs, because of the ruling we mentioned earlier. But even now, as you can see, it's starting to diverge because some reflections are beginning to come in about what happened and what I mentioned earlier. So, everything could turn around quickly, so pay very close attention. At the moment, the price is dropping, and we're heading down to test 2,110, which is basically the area of these highs that were recorded, actually, right at 2 o'clock last night as a result of what we just talked about. And a break of this level could easily lead prices to retest 2,090, 2,100, and, as you know, a break below 2,100 would be a very important level to watch. On the upside, we're keeping an eye on 2,134, 2,130, which basically corresponds to the whole area of highs that were recorded in recent weeks, so let's watch this area for a possible breakout to the upside. Let's take a look at oil which, following this recovery and activity, just like before, has made a nice upward move. Right now, it's trading around the 63 area, above the BC3 levels from the Asian session, and, we definitely need to keep an eye on today's VIX cluster on the upside, because it matches, one of the recent highs recorded last week. So, a breakout above these levels could easily push prices back up to the 64.50 area. On the downside, of course, we should keep an eye on the previous high recorded around the 62.50 area. I think it's 62.50, 62.30 is the area to watch. Let's look at gold. I always remind you guys to check the contract expirations, especially for commodities. They have different expiration dates compared to equity futures. So always pay close attention to these things, because it can be really bad to find yourself in a situation where you have to close positions at a big loss because of rolling over or other similar situations. We were saying this is gold, MMM. In short, it has returned to rest in the famous 3280 area from which then it bounced yesterday, and in short at the moment we are at bounced yesterday. It bounced last night, practically going to make a new double minimum. Here it is, 3280, and then bounced. Now it is working again above 33, so it seems superfluous to repeat it. 3280 remains the most important support to which we add these other two tests to keep. Andy, on the upside, obviously, we have to monitor 3320, 3330, because in short, if we were to return to this wider range, we could see the prices also in the 38 area, 3,380, 3,390. We'll see how things develop. As for the SPX, obviously, we'll see how it opens. If prices stay this high on the futures, there's a good chance we'll see a strong bullish opening, and then we'll see how things play out. So, for now, we've re-entered that wave I drew and left on the chart, and, well, we're working our way back into it. Let's see if maybe we can complete it, and then we can possibly disregard that little section from a couple of days ago, maybe related to Memorial Day. Basically, we'll need to study this in detail. Let's obviously take a look at Bitcoin as well. Here it is. It pulled back a bit from the highs, as we mentioned, but it's still staying within this trading range that we had identified, with these lows here that I pointed out yesterday in the daily analysis. Those lows were then tested last night in the 106.7 to 106.8 area before bouncing back up. A nice retest of this area that had formed yesterday, followed by another, less precise test with a slightly lower low, and then the price bounced back up. So now, let's keep an eye on the 108.5 to 108.475 level, because in my opinion, if 108.475 is broken, prices could quickly move up toward the 109 to 109.5 area. On the downside, of course, let's keep an eye on the 106.7 to 106.8 area. In short, this whole area here, which is a perfect support zone. Today's daily analysis was a bit longer, but there was a lot to talk about. I probably wasn't even thorough enough in explaining everything. Anyway, Thank you for your attention, and I'll catch up with you later in the chat.